And so our slogan must not be burn, baby, burn. It must be build, baby, build. Organize, baby, organize. Yes, our slogan must be learn, baby, learn, so that we can earn, baby, earn. And with a powerful commitment, I believe that we can transform dark yesterdays of injustice into bright tomorrows of justice and humanity.
Okay, welcome back, welcome back, welcome back. Today we talking about GEO Group. Today we are analyzing the GEO Group. The GEO Group Inc., ticker GEO. Over the next few minutes, I'll discuss my thoughts about the evaluations, the company, and its business quality. The company has a market cap of 1.7 billion and an enterprise value of 3.3 billion. When you do the math on that, that's about 1.6 billion in net debt, I believe, which is about 47.2% of its overall enterprise value. So that's the overall enterprise value. The market cap is 1.7 billion and the net debt is 1.5 billion. So you can see at some point you did have the net debt take off over the market cap. The GEO Group Inc., together with its subsidiaries, engages in the provision of secure facilities, processing centers, and community-based reentry facilities. I think that's really important. They are located in the United States, Australia, the United Kingdom, and South Africa. Okay. We're going to talk about the industry and its operations. It handles secure facility management, which is they operate private prisons also, and that's split between two segments. On one hand, they operate the actual day-to-day operations of the prison, and on the other hand, they just own the real estate. And that has been declining. That has been a major issue on top of, because it was its main bread and butter, the actual private prison. And a lot has changed when it comes to, I'm like looking up, trying to think. A lot has changed when it comes to, in certain states, how they police, who gets locked up, over what you get locked up now. Like, certain places have become a lot more relaxed on that, and that's kind of changed I don't want to say demographic. That's changed the population of a lot of their facilities. So they've had these facilities kind of sitting on the books, and their hopes are to sell them, and they sell them when they can. But I guess, what can you really do with the former prison? I mean, I'm sure people can get creative, surely, but a lot of these companies are trying to be cost effective, and I don't see them as seeing like that real estate. So I think GEO Group will be stuck with certain facilities, but they offer security, administrative, rehabilitation, education, and food services. I'm not sure about the food services. That's a quick Google look up. I am using QuickFS for my financial data. You can go to QuickFS and type in ticker GEO. GEO Group does operate a reentry service, and that service in itself provides housing, employment assistance, education as well. So looking at the financial performance of GEO Group, we noticed the return on investment capital is pretty low. I mean, it's pretty low, but like we said, and we've seen previously, this company is operating with high leverage, a lot of debt. So their focus isn't on the investor. Their focus isn't on returning capital to the investor. Their focus is on surviving. There's blood in the water over there. I'm sure they're just trying to survive and make sure that they can pay whomever they owe. They have been profitable, right? They have been profitable, but these are just low returns. They're lackluster. there's a 3.4% return on investment capital and an 8.7% return on equity, which are pretty low. These are low. These are low. You have revenue and earnings growing at modest pace. And believe me, when I say modest, I mean low. For example, in 2014, you had revenue at 1.6 billion. It grew to 2.4 billion in 2023. That's a compound growth rate of 4.1%. And listen, that's okay, but we can do better, right? Surely we could do better. I think we should, with an ownership mentality, view companies through this lens and ask ourselves, could that definitely could have been better. 4.1% could have been better. What are they doing where they could have gotten a better return? What aren't they doing? Revenue grew at 1.4 times, from 1.6 billion to 2.4 billion. It's growing. And understand what it had to grow before. Like, so, and these are 2021. 2021 was a good year. It was a peak for this company. I mean, it was a good year. It was a good year, but what happened? The government pulled away from GEO Group. The government no longer offered contracts towards GEO Group, and will not be renewing their contracts. So whatever ones expire. They've gotten contract renewals from ICE in that form of fashion, but I think, that may be a ticking time bomb as well. And there's only a matter of time before that funding probably comes under attack. And then what are they going to do? These are questions they need to ask themselves. I hope they are asking themselves that. We were talking about growth metrics, key growth metrics, and we were talking about how revenue only grew at 1.4 times. These are moderate numbers. Moderate in this situation is low. In this case is low. Trading, they trade at a PE ratio of 12.72 with moderate low. These are low numbers with moderate numbers. There are growth in certain areas, so which is why we will see a PE ratio so high in this company that's valued this way. The growth in these areas belong to BI Incorporated. That's the monitoring and surveillance section. And then there's the sustaining ICE contracts. I like sustaining. This company is sustaining. They're surviving. They're trying to survive, but they're like sustaining on the thread. A company like this is really waiting for like something politically to change. Looking at the balance sheet, we got a total company has total assets of 3.7 billion in 2023, which is a decrease of 4.5 billion in 2021. So that's a result of acquisitions. That's what's on their balance sheet, total assets. I think they sold a few of their assets. They were able to sell. Let's talk about property, plant, and equipment, which is important for a company like GEO Group. Property, plant, and equipment is important because GEO Group is a real estate company at the heart. They own a lot of real estate. They own a significant amount of real estate. So when you look at PPE, you want to focus on that number to make sure that they have that cost and that spend in the right area. It's decreased from 2.2 billion in 2020 to 2 billion in 2023. So they brought that down. Some. You want to see that number stable. You want to make sure that that's one of their expenses that really matters when it comes to managing their facilities. But we look at the debt and the liabilities of GEO Group. The company had 1.7 billion in long-term debt and 437 million in current liabilities in 2023, which is down 2.9 billion long-term debt in 2021. So just thinking at 2021, they had almost 3 billion in debt, right? What was the market cap? I just told you the market cap was 1.7. They were swimming in debt. They are doing everything they can right now. They are fighting tooth and nail to get this debt off their back. I like the GEO Group though. I believe the GEO Group has potential when it comes to the reentry and rehabilitation sector. I don't know what made them put that on the sideline, but it's clear that private prison, the for-profit private prison model, is failing. They don't exist. That environment, and listen to my words, please. That environment doesn't exist to the extent that it did in the past. A lot of states, whether good or bad, have changed how they police, what they arrest people for. In some states like San Francisco, that's changed a lot. And in some states like I think Chicago, that's changed. And this has put a strain on the population and beds and number counts that GEO Group has when it comes to their for-profit prisons. So what they did was they focused on BI Incorporated, and this is their way of trying to sneak in alternative investments through predatory monitoring. BI Incorporated is often a subject of predatory monitoring and surveillance. So I don't see that lasting long as a business model. Then you have the detention and ICE contracts, which are constantly under political and public spotlight because, the whole idea of cages, the whole idea of detention centers is pretty pretty wild. Yeah, that leaves us with just reentry, and I believe that is the future of this whole industry: reentry and rehabilitation. The idea that X amount of inmates return home yearly, and they need to be returned home properly trained. They need to be returned home with the skills that equip them after having served the time and have to have rehabilitate, have gone through some sort of rehabilitation. GEO Group is already a provider of these services, so why not just expand those services? I don't know. That's why I like the company. I'm hoping down the line. I don't want to say hope. I'm actively building videos like this are part of building into making the case that GEO Group eventually one day sees that this is something they should push. Where can we talk about before we end the video? Operating profit. The operating profit fluctuates. It peaked at 384 million in 2022, but it decreased to 352 million in 2023. So there's some movement there. That's in their operating profit. SG&A expense. SG&A expenses increased from 115 to 191 million. I think that's our administrative. We always want to watch that too, because why are your expenses getting higher? What are you guys doing? Who are you hiring more people? Or is someone getting, paid out a little more than usual? Let's run through key metrics and then we'll end this. Some key metrics to just have in your mind: return on assets decreased 4.9% to 2.9% in 2023. That's from 2014 to 2023. Return on equity. The return on equity decreased 13.9% in 2014. It was the return on equity. In 2023, it was 8.7%. Return on investment capital. Return on investment capital decreased from 5.5% in 2014 to 3.4% in 2023. Our margins, we have a gross margin, which are remaining stable. Gross margins are fluctuating between 24.3 and 30%, We have debt to equity ratio, which decreased from 2.1 in 2015 to 1.4 in 2023, which is indicative that they are trying their hardest to pay the debt.